Market conditions still holding at majority bearish, 11 and 3, finding a little bit of support here and a little bit of strength now over the last 3 or 4 weeks. Been pretty volatile range right here, running up against some resistance right now to keep an eye on. On the weekly time frame over here, we're looking at that 55.37 range, which is right where we're at. You can see my mouse over here on this side when I'm dragging it right at the upper end of that 55.37 range, where it's right where we're at. That's a significant breakdown zone here where we had this area and we broke down right here. Now we're retesting that area, and we'll see if bulls can push the back up and hold that level. So far holding that 5,500 level, and that is just right. That's right where we're at right here. If we can clear up above this 55.37 and hold that range, that's going to be a significant a win for the bulls if they can hold that upper level. And so that's going to kind of be the range that we're looking at probably for the remainder of the week, unless we really get some kind of news right in the middle of earnings season this week. So we're going to get some volatility just based on earnings and what's happening. Saw this morning UPS laying off 20,000 employees, things like that, watching to see how companies are reacting to a lot of the discussion in tariffs and just the overall economic condition. S&P 500 closed out yesterday 10 and 4, 9 and 5 on the weekly time frame. Again, still, kind of that mildly bullish, knowing that we are churning out a bottoming process right here, but we're right at that area where we could flip and head back down again. We've got this really strong downtrend now in place, working on a potential counter trend of that. And so now the question is, are we going to head back down again, or are we going to get some strength in the near term? That's kind of the discussion right now. We are seeing additional participation in the breadth of the market. The number of stocks above the 50-day on the S&P 500 is back to 34. So we've gone down from this 10 range, working our way back. Obviously, have some work to do. If we look at the weekly time frame, we're still pretty deeply oversold in as far as how far it can actually get down. And these are pretty significant lows, and we've only worked our way back up to here. So nothing super exciting about the magnitude of the rally, but it's still working, and we'll see if we can get back even close to this 50% range or not. Gonna be, we're now entering into May, and the summer months tend to be a little bit less a little less activity. We'll see if that's the case here going forward this year. VIX also showing some bullishness for the market as a whole as it becomes a little bit more bearish. Still majority bullish here, but retracing back into the 20s now. And so now we're back into a bearish trending zone for for a volatility, which is good for the markets as a whole. S&P or SHY, short end of the yield curve, it's still looking strong right here as far as bond prices moving higher on that short end of that yield curve. We're seeing the bond price, the yield itself, moving lower, which is what we also want to see. And so that's doing what it's supposed to do right here. TLT still in a really solid downtrend. I'd like to see TLT actually start to get some bullishness to see if we get that 10-year to continue to kind of flatten out and start to roll back down again. If we look at that weekly time frame, you can see really where we've come in the last couple of years now. We've gone from those really low rates, kind of coming out of COVID and working our way back up. We were back down in the 1-2% range. Now we're seeing that 4% range, and seeing if we get a little bit of compression on yields, or even just a full retracement. We've got that real tight compression on the daily time frame. See if it'll start to pull back in a little bit here as well. Dow Jones Industrial Average also showing, let me move that back just a little bit, pushing back up into this counter trend move of that 50% retracement. Not as strong as the S&P, still a little bit of weakness on the Dow, and triple Qs having a little bit of strength here as well. Let's see where those ranges are. Back up to, bouncing that 50%, 382, 236 is coming into play here, right at a 50% retracement on triple Qs also. And so really across the board, watching this zone right here to see if we see how it reacts, and if we get any kind of catalyst that might push markets one way or the other. We're seeing Russell 2000. That was a little bit deeper retracement on that weekly chart, but coming back into this demand zone and pushing back up. Now we've cleared up above that 236 at least and worked its way back up into testing this 199 range, that 382 retracement for Russell 2000. USO, finding a little bit of support here in USO, at least the last few sessions. Everything in yellow right there, working on that transition. Still majority bearish, a pretty aggressive sell-off that we had with all of the tariff discussion a month or so ago. Gold also having a little bit of a retracement back to 305, but still in the momentum zone, and be watching to see if we get a lot of demand coming back in. So essentially that's about $3,000 on the actual price of gold itself. We're looking at the ETF, which is GLD, and so getting a little bit of a retracement. It really needed it and really still needs it. It's got just really, really wide expansion on this bull trend right here. But as long as that continues to react around that 236 location, there still may be some opportunity in gold itself. Let's take a look at silver. Silver's got a pretty decent, not as strong as gold obviously, but even on that weekly time frame you can see we're at the upper end of that range and had a lot of bouncing around here, holding that support area. If we get a good solid move on silver, we may see some acceleration on that. Going higher, DXY, which is the dollar index, also finding a little bit of support right here. And then also the yield curve. On the weekly time frame, this yield curve actually looks, this is what we want to see. We want to see that inversion. Anything below this yellow line right here, this is an inverted yield curve, meaning that the 2-year yield is higher than the 10-year yield. You can see we're no longer inverted because we have a 10-year yield which is higher than the 2-year yield, but they're still relatively close, but they're working in the right direction. A healthy bond market, we want yield curve that is moving this direction, having a wide yield curve instead of a compressed or even an inverted yield curve. And so we're working our way that direction. Let's take a look at a couple stock ideas here. And we've got a couple that I noticed this morning. USAU, which is a nice gold name right here as well. Big volume, nice confirmation bar. Not quite back in momentum, but getting there. Gold. Some of these gold names may continue to have some legs in them. And then also interesting pattern here is H&R Block, finding some support, getting ready to push through some of that level. Not a huge list in there as well. And some of these, we're seeing insurance, we're seeing gold, we're seeing oil names, we're seeing a few biotechs coming in here and there, but everything else in terms of some of these big name stocks are still sitting right at the bottom of the list, like Nvidia. But some of these are also getting a little bit of a push back into potential bullish zones. Microsoft here, bottom end of that range, but again, trend may be starting to shift right here. Google had a big, nice move the other day, and so a lot of work to do on some of these names. There are certainly other ones that are already in momentum. Those are the ones that we're looking for, but some of these, if you're looking for, reversal type patterns, bottom fishing type patterns, there's Tesla as well, which is starting to find some demand at some of those lower levels as well. That'll do it for today's update. Everyone have a fantastic day today.